real quick, and the recording is on right now. So once again, welcome everyone. It's Marcel here. Welcome everyone in the usual Wednesday live session. And in this live session, at the beginning of the session, of course, there will be an educational topic. And this educational topic will be about the flips. This will be a really quick and small educational topic. But I saw that lots of you guys were actually confused about the flips yesterday and didn't really know how to use the flips and didn't really know when it's a change of character and when it's a flip and how to properly use the change of characters and how to properly use the flips. And I've already made a video about the higher time frame flips, and I've already made a video about the change of characters. So flips are coming right now, and it will be really easy. So don't stress out. Just let's start the session. And first of all, I will ask you some questions about the flips and change of characters. The first question is, I will write it down here. Just higher the size of the text and change of characters. Change of characters can only be used for reversals. Is it true or not? Just write on my screen. And keep your answer on the screen, please. Don't remove your answer. If you answered, just keep it there. Keep it there if you answered. Okay. So I saw that majority of you guys have voted on the yes. And that's the correct answer. So change of characters mainly can be used for reversals only, because change of character is a reversal pattern. Here comes the next question, which is connected to the change of characters question. Please just remove your drawings, everyone, or I will manually remove them. Clear all. Okay. Okay. Second question. Flips. Yes or no? Flips can only be used for reversals. Yes or no? Perfect. Perfect. Thank you, guys. Yeah, exactly. That's the main key here, right? That's the main key right here. So basically, change of characters are reversal patterns, and we can use these change of character patterns for reversals. Let me just remove the drawings because it's annoys me. So change of characters can mainly, please stop it, stop drawing on my screen. So change of characters can mainly be used for reversals. For example, when a higher time frame supply/demand is being tabbed, a 15-minute, 5-minute supply is being tabbed, then you wait for a change of character, and that will be a reversal pattern. But the flip can be used for reversals too, for the same purpose when a higher time frame supply/demand is being tabbed. For example, a 5-minute supply is being tabbed, and there can flip be formed. So price can actually form a flip there, but flip can be formed for cantonations too. So flip isn't just a reversal pattern. Flip is a cantonation and the reversal pattern too. But I've explained this already in the higher time frame flip cantonation video, I believe. I explained that in that video, which can be found in the Telegram channel. So please just check that video if you haven't seen that already. It's I don't know, 20 or 30 minutes long, and I'm talking about the cantonations. And I've explained how can you use the higher time frame cantonations, higher time frame flips, and higher time frame confirmations with flips. So please just check the video. And in this webinar, I will talk about how can you use the lower time frame flips and what flips are, and why are you using that demand zone / supply zone that is called the flip, and why not the one that's below it? Because I saw that this is the confusion topic around you, because you can't really identify which one is the good flip zone and why are you using the flip zone instead of the extreme. So I will just explain this. But once again, thank you guys for paying attention to my webinars, because this question could only be answered by the webinar. And I told you about this topic in the webinar. So that means you saw that webinar and you paid attention to that webinar and you learned that webinar. So once again, thank you. Okay, and let's just start with the drawing. Let's see a pattern for a demand reversal. So around here, there's a 15-minute demand zone, or let's just stick with 15-minute / 5-minute demand zone. That's a 15-minute / 5-minute demand zone. And let's say price is following a bullish pattern. Okay, so this is the 1-minute structure. Price is following a bullish pattern, coming down, coming up, coming down. And from this demand zone, from this 15-minute/5-minute demand zone, prices created another bullish upside movement. And after the bullish upside movement, it came down to this 15-minute/5-minute demand zone. Okay, this is a structure right now. This is a structure right now. And let's see. Here was a 15-minute breakout structure to the upside, breakout structure. And once again, these movements, these arrow movements are 1-minute movements. Okay, so these aren't 15-minute movements. These are only 1-minute movements, and I will mark it right here. But these are 1-minute movements. Okay. Can you just mark the last recent supply zone for me, please? That has no. Raise your hands. Raise your hands when I'm asking a question. Sorry, remove. And if I'm asking something, just raise your hands. And whoever raises its hand first can answer the question. So, can you just answer me or show me which one is the last recent supply zone? I don't know who was the first. Let me just check. Joined. Yeah, that was Nikita. Nikita, please just mark it. Yeah, exactly. That's the last recent supply zone. And what does it mean? That for a change of character or a flip or a reversal, that supply zone has to be broken, right? And why, once again, raise your hands, why that supply zone has to be broken first and why only that supply zone? That was Nikita again. Yeah, Nikita? Exactly, because structure is bullish. So we need only one change of character and one supply break for a reversal and to safely enter in a bullish trade. So because this isn't a counter trend trade, it's a pro trend trade, main trend trade. We need only one change of character point / one flip point. So if this high point breaks, don't draw on my screen because it annoys me. So if this high point breaks, then we can execute safely a bullish trade to the upside, for example, on a flip zone, or for example, on a change of character point. But let's see the difference between a change of character and a flip zone, because I saw that lots of you guys are confusing the change of characters with the flips. Basically, not every, but almost every flip is a change of character, but not every change of character is a flip. So just take a look at this. That's the last recent supply zone that has caused the last recent innovation push to the downside. That was the last recent breakout structure on the 1-minute structure, right? So this is the 1-minute structure. This is the 1-minute counter trend pullback structure. So this is just the pullback phase of the whole bullish movement. These pullback phases happen all the time. And if the pullback phase ends, which will be end because price is following the main trend. So if the pullback phase ends and taps into, for example, the 15-minute/5-minute demand zone, and it changes character / creates a flip zone, that will be the highest probability setup for you to enter because you're following the 15-minute main structure, you are following the 1-minute counter trend structure, and you are waiting for the break of the 1-minute counter trend structure. And if the 1-minute counter trend structure breaks, you'll be able to enter in a long position on the pro trend side. This will be the pro trend side if this supply zone breaks. But how can this supply be broken? This supply can be broken if price, for example, creates a change of character, which is a simple change of character. If price creates a recovery right here, so taps into this 15-minute/5-minute demand zone and immediately reverses with impulsive, high impact movement, high volume movement, and breaks through this supply zone without a question, without a reaction. If a price can break above this supply zone without a reaction, so it just simply comes up with few candles, and those few candles aren't reacting on this supply zone, so there won't be a wiki reaction, there won't be anything like this, just a simple breakthrough of this supply zone with one candle or few candles, that will be considered as a change of character. And if this happens, then you can wait for the extreme play, because if this happens, somewhere around here, there will be a demand zone that has caused the break of this supply zone. And for example, price creates liquidity. We've talked about this scenario so many times, so please just check the past webinar because I've explained this in the past webinar. So if price, for example, creates liquidity for this zone and creates one more breakout structure to the upside, then you'll be able to enter on this specific demand zone that has caused the break of this supply zone. But you know, these are continuation scenarios. So we won't talk about continuation scenarios right now. We'll talk about the difference between the flip and the change of character. So if this happens, price breaks above the supply zone with one inversion movement, then you'll be able to enter on this specific demand zone that has caused the break. And why will be this the right demand zone? Because this demand zone could easily take out the supply zone after a demand reaction. And if a demand zone can take a supply out with one inefficient movement, that means there's strongness there's a strongness for the sign of the bullish trend. I mean, there's a sign for the strongness of the bullish trend, because supply couldn't hold price. Supply couldn't take over control partly. Without a question, it just broke through that supply zone, meaning demand is highly in control, heavily in control, because there was a demand reaction, immediate reversal, and immediate supply break. And if the supply breaks, that means that demand is fully in control, and this wasn't even a supply, and this won't be a supply to, this won't be a supply to, and this one by a supply to, because price is following the main trend, and it just broke above a supply zone without a question, which means we can expect a higher time frame breakout structure right here again to the upside, and we can continue the main trend. If this happens, this will be a change of character scenario, change of character reversal scenario. But we like to talk about the flips. If price reacts on this supply zone, on this last recent supply zone, and there will be a reaction. So price, for example, creates a candle, prints a candle right here, that this candle reacts on this supply zone with a wick, then the next candle opens right here and forms a candle like this. And after a reaction, price forms another inefficient movement to the upside, which will be from this, for example, demand zone, which is efficient. And from this demand zone, another inefficient movement will be formed, and this inefficient movement will break above this supply zone. This will be a flip scenario. And this flip scenario doesn't have to break above one more supply zone, because this trend is a proton trade. So in a proton trade, one supply break is more than enough for us. But if, for example, price breaks above this supply zone too, that will be the strongest scenario for us, but it's not necessary. So what happens if price reacts on this supply zone and creates a reversal? And from this reversal, for example, from this demand zone, price creates another inefficient movement to the upside, which breaks above the actual supply zone. Then why are we opening a position? Let me just smaller this zone a bit because it's too huge for us. So yeah, let's use this as a demand zone. So why are we using this demand zone? Why are we using this demand zone instead of the extreme? Because I always say that if your zone hasn't have liquidity, so that there's no liquidity for your zone, then your zone will be liquidity for the deeper zone. But in this scenario, this specific sentence isn't true, because in a flip scenario, the flip zone will be the right zone to choose, and the flip zone doesn't have to form liquidity. So for example, if price creates this flip zone, taps into this supply zone, creates a reversal, and after a reversal, price just breaks above this supply zone, price doesn't have to necessarily create liquidity for this zone, so there doesn't have to be double bottoms, triple bottoms, liquidity trend line, etc., etc. So this demand zone will be valid without even a liquidity too, because this is a flip zone, and the flip zone is one of the strongest entries that we use. And why this will be the good zone to choose and not this one? Because basically this zone down here has created an inefficient movement, right? But this zone isn't a demand zone because it couldn't take a supply out. And if it couldn't take a supply out, this won't be a demand zone. So we can't expect a reaction on this demand zone. Basically, because in order to form a valid demand zone, price has to break above supply zone / change character / breakout structure, right? This demand zone couldn't take a supply out. So basically, this demand zone did nothing in price action, but created inefficient movement. And that inefficient movement has a chance to be filled up. But if this inefficient movement is being filled up, then it has a higher chance that price will break below this demand zone rather than holding on this demand zone and reversing on this demand zone. Because basically, this isn't a demand zone. Demand kicked into the market from this place right here. So price and demand kicked into the market from this place, from this demand zone, because this reactional demand zone, this reactional candle could break above supply zone. So this candle could break above supply zone, could take out the supply, meaning demand is highly in control, strongly in control. And this strong control came into the market from this demand zone and not from this demand zone. And basically, there's one specific scenario for this where you can't use the flip zone over the extreme zone. And there's one specific scenario when you can actually set a limit order on this demand zone. And I'm asking for this scenario, if you can show me this scenario. So somebody who'd like to show me, please just raise their hand. There's no good or bad answers, just I'm asking for your opinions. So please raise your hands if you'd like to show me. JD was the first. So JD, please. Let me just remove these drawings from here and write on my screen a scenario, a flip scenario where this demand zone can be used and not this demand zone can be used. So please just draw on my screen and show me a scenario that you are thinking about. Liquidity, yeah, please just continue. Exactly. That's perfect. Please just remove the drawing. Or I will remove it. Exactly. There's one specific scenario where this demand zone that flips the supply zone can be used, because that will be part of the liquidity. So basically we are focusing liquidity over everything else, right? So there could be supply zone, there could be a demand zone, there could be a structure, there could be anything. We are focusing on liquidity over everything else, because if there's a liquidity, for example, price struggles to break above the supply zone, struggles to create any impact movement, and it creates a range, for example, on the downside, creates a strong liquidity. And from this strong liquidity creation, price just breaks above the supply zone and creates a flip scenario right here. So there will be a flip scenario. A flip has happened from this demand zone, right? Because that's right, price was struggling to create any impact movement right here, and it has reacted on the supply zone. But overall, at the end of the day, demand has took over control from supply because it broke above that supply zone, and the break has happened from this demand zone right here. But in this specific scenario, you can't use this demand zone because this demand zone is heavily part of the liquidity. As you can see, there's triple bottoms, and the rule is still alive. Liquidity rule is still alive. If there's a liquidity for your zone, and if the zone is part of the liquidity, if your zone that you're trying to enter on is part of the liquidity, then you can't use that zone for your entry point because you want to avoid being part of the liquidity. And literally, you just want to avoid being part of the liquidity at all price, right? So if this setup forms and you're insecure about this liquidity point, and you're insecure about this POI, and you don't want to enter on this POI, and you don't want to enter on this POI either because this demand zone is not really a demand zone because it couldn't take a supply out. Now it has two criteria. First criteria is inefficiency. Second criteria is the liquidity. But this still isn't a demand zone because the highest criteria for a demand zone is to take a supply out, change character, or break structure. So demand zone will be a demand zone, supply zone will be a demand zone if it can change character, flip something, or break something. This is the main rule for the demand zones and supply zones. There could be inefficiency, there could be liquidity, but the main and strongest criteria for a demand/supply zone is the break, change of character, flip. If these are missing, if one of the criteria are missing from these that I just mentioned, that won't be a valid, that won't be a strong, and won't be a super strong demand zone/supply zone. So in this scenario, this demand zone has liquidity, has inefficiency, but missing the break of something, missing the flip of something, missing the change of something. Meaning this isn't the right demand zone, this isn't a good demand zone, and this isn't a good demand zone either because this has a liquidity just below it, right? So this is part of the liquidity. Meaning you can't open a position on this demand zone and you can't open a position on this demand zone because this is not a strong demand zone. You have two choices right here, which basically the choice is yours. If you really trust this demand zone, and if you really trust the trend, really trust that price will continue the upside movement because there was a change of character right here and the price is following the main structure. And this is really, really, really important that price has to follow the main structure to open anything like this. I mean, this specific scenario, it's really, really important that price has to follow the main structure, because if price is following the counter trend structure, and this would have been a counter trend trade, then this will be swept out for sure. In a counter trend trade, these trades like this will be swept out for sure. But if it's following the main trend, it has a higher chance, even though this isn't a real demand zone, it has a higher chance to actually reverse price to the upside. So you have two scenarios right here. If you're really, really sure about the trend, if you're really, really sure about the trade, the criteria, everything, then you can open a position on this demand zone. But mainly, if something like this forms, I'm just simply waiting for one more confirmation, because this demand zone has a chance to reverse price. Of course, there's a chance that price will be reversed on this demand zone and this liquidity won't be swept. Then if this happens, then you can simply continue the main order flow and you can open positions in the fresh new demand zones, etc., etc., etc. These are continuations. I created a continuation video, just watch that. So, but if this demand zone breaks and price flips the liquidity, and for some reason, for example, it creates one more liquidity line, and for some reason this demand zone holds, I'm just simply confirming my entry limit. I'm just simply confirming my POI, because this isn't a valuable demand zone for me. I don't know if for you it's a valid demand zone or a valid POI to open a position on, but for me, this isn't a demand zone. Demand has to take a supply out in order to become a valid demand. Demand has to change character, break something, flip something to become a valid demand zone. So for me, this isn't a valid demand zone. Because for me, it isn't a valid demand zone. I'm just waiting for simple confirmation to actually confirm this POI. If this POI is being confirmed, and for example, price creates a change of character right here, and it doesn't have to break the swing structure. It doesn't have to break above the swing structure. It can just simply change character right here on the less recent structural point. Then this will be confirmed. And if this is being confirmed, then there will be a new demand zone that has caused a change of character. And basically, all of the POIs are being confirmed here. And in this specific scenario, and I'm entering on this zone. And there's a chance that this zone will be part of the liquidity because there's a liquidity, as you can see below this. But if this confirmation happens, I'm risking that I will be part of the liquidity because it has a higher chance to actually reverse than just sweep the liquidity, because it has swept liquidity right here also. It has swept the liquidity, it has changed character. And if this liquidity sweep and the change of character isn't enough for the price to reverse to the upside, then this sweep of the liquidity from below this zone won't be enough to, and there will be more likely a continuation to the downside than just a reversal to the upside. But these are really specific scenarios. These are happening for like once in a month. So these aren't really relevant, but I just told you what can you do in this specific scenario, because it's important to know, because you'll see this in the future. You'll meet with this scenario in the future, and you have to know what should you do in this case, in this scenario. So, but once again, these are really extreme and specific scenarios that doesn't happen very often. So yeah, but this is how you can actually make a difference between a flip and the change of character. And it's really easy. There's nothing complicated in this, because flip has to react on something. A flip has to react on a zone. For example, a supply to demand flip has to react on a supply zone. If there's a supply zone, this is a supply zone, price has to react on this supply zone. There has to be a reactional candle. There has to be a wick that has reacted on this candle. It doesn't have to create candles right here. It doesn't have to create several candles that has reacted. It can be just one candle right here that had created a wick to the downside. This is still a reaction because price came up, candle has been formed, wick to the downside. This was a reaction because this is the footprint of price. Basically, this candle, this wick is the footprint of price. And if this is being formed, then this is a reactional candle. And if the price breaks above this supply zone, this will be a right candle. Of course, it will be a big candle because it has a wick, but you can use a 50% entry right here. So a reaction has to happen in order to become a flip. A change of character is a change of character if it's not reacting on the supply zone / demand zone. If it's not reacting on the supply / demand zone, that will be a change of character entry right here. This will be a change of character. There will be a demand zone that has caused this supply break, and you'll be able to enter on this specific character changing demand zone. Flip has to react on this supply zone. A flip has to touch this supply zone, react, and break above. This will be a flip zone. Mainly I prefer flips over change of characters, because in a change of character entry, there could be several demand zones that could be used. Because, for example, let me just draw it for you once again. There's a supply zone, and for example, price prints candles. This will be the first inefficient candle that has caused first inefficiency, and after this, price, for example, fills up the price makes the price efficient, and there will be another inefficient candle that has caused the second inefficiency, and you don't really know which zone to choose. You don't really know that the extreme will hold, don't really know that the decisional will hold. And that's why I prefer flips over change of characters, because in flips, there will be only one candle that flip the overall supply zone / demand zone. So in a flip, there will be only one candle that has caused inefficient break of this supply zone, and you'll be able to enter on that specific candle. And for me, flips are more, flips are stronger because there's a battle between the buyers and the sellers, and a battle happens here. A battle happens here when price taps the supply zone. Sell orders are being opened, sellers are in control, but buyers take over control from sellers. Buyers are in control, meaning buyers were stronger than sellers, meaning that all of the sellers have been swept out from the market. And if this reaction happens, that means that the sellers have been swept out from this region, and there won't be sellers, or less sellers will be on the higher supply zones, for example, like this. Let me just present this on the arrow movements. So if there's a reaction, there's a battle between the sellers and buyers. Sellers will be swept out from this movement. All of the sellers have been deleted. There will be less sellers on this supply zone. So there's a lower chance that price will react on this supply zone. If price simply creates a change of character right here without a reaction on this supply zone, that means that sellers are placing their orders right here. So there will be a battle between the sellers on the next, between the buyers and the sellers of the next recent supply zone. And that's why I prefer flips over change of character, because flips are actually confirming that your trend is being confirmed. Your trend that you're trying to trade is on the right side, and you're on the right side of the market. Because if a flip happens and the demand to supply flip happens, I mean supply to demand flip happens, that means if you're trying to execute a long trade, you're on the right side of the market. and sellers have been swept out from this region. No sellers right here, less sellers will be right here, even less sellers will be right here, and you'll be able to continue the overall bullish movement to the upside. That's why I prefer flips over change of characters, but both of the entry types are good. Both of the entry types I use, and yeah, basically that's all about change of characters and flips. There's nothing strange or hard about these flips. Basically, flip has to react on something to become a flip. If price reacts on something and breaks above that something, there will be a flip zone. That's all about the flips. That's all about the change of characters. There's nothing more to overcomplicate about these things. So yeah, please let me know if it was understandable or helpful or anything. %. Okay. Perfect, guys. I will hop out for a glass of water. Just a minute, please.
Yeah, guys. How's your day so far? Did you take trades in London session?
Waiting for anything to happen.
Yeah, that's for me the same. Patience this week, yeah. Yeah, this week full of patience. No trades yet.
Yes, and it's a little bit frustrating, but
Yes, it is, but you know, it's better to wait for confirmation than taking huge losses because of impatience. So yeah, it's better to wait.
Okay, guys, one more thing about these flips and change of characters, etc., is that it's really important for you to understand the fundamentals, not just the fundamentals, but the reasons behind what price is doing. Because there could be a flip, there could be a change of character, and you could say that there's a flip and there's a change of character because you learn the technical analysis, learn the technical side of the market. But you have to understand what's happening, what's really happening behind price. And that's why I explained that sellers are being swept from here, buyers are in control, and you can safely use a long entry because sellers have been swept out and less sellers will be right here. It's really, really important for you to understand what's happening behind price, because it's not enough to know that actually price is created a flip zone. Yeah, okay, there's a flip zone entry. You have to know what's happening behind price, because if you build a narrative about what's happening behind price, then you'll have a clue that who's in control. You'll have a clue that who's actually controlling the market. Sellers/buyers are in control. Which side can you trade? Which side is in control? Which side is the pro trend? Which side is the counter trend? So it's really important to actually build a narrative behind the fundamental side of the market too. And that's why I'm trying to create these perspectives too, because if you learn these from what I'm saying about these things, you'll get a better perspective around price and what price is actually doing. So yeah, once again, that's all about flips. It's long enough because oh my god, or 30 minutes have passed already, and I just wanted to make it in 5 minutes, but never mind. Let's just start the overall top-down analysis on the 4-hour chart. 4-hour chart is quite interesting now. I'm just asking a question. Raise your hands if you'd like to answer. What do you think? Who's in control on the higher time frame? Chilling markets? Please, if you're raising your hand, try to use your microphone and not just the chat, because that's the reason and that's the importance behind the community between us. So if you're raising your hand, please try to use your microphone. Demand is in control, right? On the higher time frame. You're saying on the 4-hour, daily, and weekly, demand is in control, right? That's what you're saying. And if you're saying that, you're right. Partly, you're right. On the 4-hour chart, right now, if you see, there was a supply reaction, and price is currently reacting to the demand zone. So demand is in control. And if you take a look at the actual structure on the 4-hour chart, price is following a really, really bullish pattern and just creating inefficient movements to the upside, pullbacks, demand reactions, inefficient movements, pullback, demand reactions. inefficient movements, pullback, demand reactions, inefficient pullback, demand reaction. And this is the expectation order for us that we can follow actually on the higher time frame. And as you can see, of course, there were supply reactions over and over and over again. There was a supply reaction right here also. There was a supply reaction right here. There was a supply reaction right here. But price just continuously kept breaking above these supply zones with inefficient movements, inefficient movements, inefficient movements. And actually, the price is inside of this supply zone, which was a flip zone. And I've marked this flip zone around a month ago. And I've showed you this flip zone a month ago that I'm expecting a reaction on this supply zone. If price reaches this supply zone, and price has finally reached this supply zone and reacted on it and reverse on this supply zone, as you can see. But let's just continue with the higher time frame first. So the daily, what can we see on the daily? On the daily, we can purely see that price is broke above the supply zone right here, and it's not really reacting on something significant on the daily chart, just a buy to sell candle, which I don't really consider as a real supply zone. There's the less recent demand zone, supply zone on the daily chart. So currently on the daily chart, demand is highly in control because it broke above supply zone, created a demand zone, and price is on the way down to tap this demand zone that has caused the break of this supply zone. Basically, that's what you can see on the daily chart. The same goes on for the weekly chart, because as you can see on the weekly chart, there was a break of supply zone right here, downside movement, upside movement. This is a weekly supply zone, weekly inside bar. As you can see, this candle is inside of the last recent candle, inside bar. Price is just broke above this weekly inside bar, created a change of character on the weekly chart too. Weekly has turned into bullish because there was a change of character. Daily has turned into bullish because there was a change of character. 4 hour is currently bullish because price is reacting on this demand zone. As you can see, it's currently reacting on the demand zone. And basically, that's all about the higher time frames. There's nothing much to say about these higher time frames because you can clearly identify that the controlling side of the price is bullish right now, and price is going up, 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 up. But let's just take a look at this chart. What can we see right here? That this is a really significant and important supply level that has flipped a really significant and important demand level right here. This was the lowest point of the last recent weekly leg or daily leg. I don't know what kind of flag was this, but price has flipped this daily leg / weekly leg from this supply zone, as you can see, because there was a reaction and this is a flip. This is a perfect example of flip. There was a reaction, pullback, and from this candle, price has flipped this demand zone. And price is currently reacting on this flip zone, as you can see. It's reacting on this flip zone. And yesterday, just week above this flip zone, as you can see, there was a week above, but no 4-hour candle was being able to close above this supply zone. So there was no 4-hour candle closure of the supply zone, as you can see, meaning the supply zone isn't broken, meaning the supply zone is holding. And as you can see, price is currently breaking below the last recent demand zone, and it's not just reacting on this zone, but breaking below this zone. And that's why this will be a change of character, because as you can see, this candle isn't a change of character because this couldn't body break over this last recent week. So this is the last recent low point for us. And if this zone breaks, there will be a change of character on the 4-hour chart. And more likely, there was a change of character somewhere around here on the 15-minute chart. So according to our plan, a 15-minute change of character after tapping into a 4-hour zone is perfectly enough. But if this zone breaks, this 4-hour zone breaks, and the 4-hour change of character will happen, then that will be a strong sign that we'll be able to sell down to some deeper demand areas. For example, deeper demand area could be this one. For example, deeper demand area could be this one. Could be this one also. So there are several options for us to choose from and to target. More likely, some of these demands will be able to hold price, and we'll be able to hold the shorts down to these demand areas. And some of these demand areas will give us a good entry opportunity on the long side to enter in the market. So if price changes character and breaks below this low point right here with body closure, that will be the best if price could break below this with body closure. Then, okay, right now I really consider this change of character because there's a good amount of break of this zone, this low point. So I consider this is a change of character. So 4-hour change of character has happened, I would say this. And this zone has caused the change of character. This is the 4-hour zone that has caused the change of character. So for example, good scenario, price comes up to the supply zone, or it doesn't really have to come up to the supply zone. And mainly, I believe there won't be a 4-hour supply reaction. There will be just a 15-minute supply reaction somewhere around here. So there will be a supply reaction, change of character, and you'll be able to enter in a short trade because right now, short is the controlling side of the market on the 4-hour chart and more likely on the 15-minute chart too. So if this happens, then you will be able to enter in a short trade, targeting these demand zone down here first. Or there will be some other 15-minute demand zone that will be valuable for us. And mainly I will target for around 10 to 15 risk-reward ratio. And if I can find a good demand level at 10 to 15 risk-reward ratio, I target that demand level. So if this scenario happens, then you'll be able to target the next recent demand levels, or either if it's a 15-minute zone, either if it's a 4-hour zone, and you'll be able to see a 4-hour scenario much cleaner. And I will just switch to the 4-hour, 15-minute pretty soon. But let's just aim for the 4-hour zones right now. If price taps this 4-hour zone first, and there will be a 15-minute change of character, then the main trend will be continued because price has collected enough liquidity to continue the overall main trend to the upside. Because this could be just a pullback of the main trend. This could be just a pullback of the main trend because, as you can see, this isn't a real pullback. This isn't a real pullback. This isn't a real pullback. No demand zones has been tapped over and over again. Price has just reversed without tapping into a demand zone here, tapping into a demand zone here, tapping into a demand zone here, as you can see. So basically, these aren't real pullbacks. A real pullback is happening right now to some deeper demand region. And if this real pullback happens, then we'll be able to trade based on the 15-minute change of character that happens inside of one of these 4-hour demand zones. So this could be a really, really good scenario for this week, for this day. If price creates a pullback down to this demand region, and we can enter in a short trade right here, targeting these demand zones, entering this long trade after a change of character right here, targeting the last recent high point. This is a really, really good 4-hour scenario, and price is actually showing this scenario to us, and this could be a really, really high probability scenario. But right now, let me just switch to the 15-minute zone chart, and first, let me just drink a few sips. Okay. Is it understandable yet? Okay, it is. Thank you. So, remove this drawing, please. Thank you. Continuing with the 15-minute chart. So as you can see, these levels, sorry, let me just equal these levels because my OCD is screaming right now. Okay, so these levels are the less recent 4-hour zones. Let me just see if there's any more 4-hour zone about this one. Maybe this one could be a 4-hour zone, but I don't really care about that small candle. So, okay, these are the 4-hour levels. Above these 4-hour levels, we can find several 15-minute levels too, as you can see. This is the 15-minute zone that has flipped the 4-hour zone. There was a reaction. And as I said, this is a flip zone because this zone could create a reaction inside of that 4-hour zone. So price was coming up, reacting on this zone, pullback, breakthrough. This is a 15-minute flip zone of the 4-hour supply zone. Perfect. This is our less recent valuable zone for us because it has created huge inversions to the upside, as you can see right here. It has huge liquidity line above it, starting from here or even right here. This is liquidity. And price is basically creating liquidity, more liquidity for this zone. And if this zone tap happens, let me just close this zone first or equal the levels. Okay. Two scenarios. First, if this zone is being tapped first without tapping into this supply zone, there's a chance that price will tap this demand zone, create a change of character right here, and come up to this supply zone to tap into this 4-hour supply zone and to create a change of character inside of this supply zone. This is the first scenario that we can expect. So price comes down to this demand zone, and if this demand can give a reaction to us, then we'll see a tap of this supply zone. And if this supply is being tapped, then we can wait for a reaction, confirmation, and continuation to the downside. But there's a chance that if this demand is being tapped, that price will simply break above the supply zone and the main trend will be continued to the upside. So you really can't predict what will happen. I'm just showing you the scenarios that could possibly happen in these days, in these sessions. Okay, this is the first high probability scenario. Second high probability scenario, the price will react on some sort of 15-minute supply zone here. For example, like I'm not drawing the zone with this. In this scenario, I wouldn't use the wick right here because the wick is too small to be an actual supply zone in this case. So I will just use the full body and the wick combined together and use this supply zone. And as you can see, this is the less recent valuable supply zone on the 15-minute chart because it has a liquidity just below it. There's a perfect liquidity line right here. And I saw that lots of you guys have confused this as a change of character right here. This isn't really a change of character. This is just a liquidity creation for this zone. And yeah, I wouldn't really consider this as a change of character, because for change of characters, I would rather use on the 15-minute chart a body break rather than the week break. I'm using the week breaks on the 1-minute chart only. But yeah, there is trend liquidity above. Yeah, there could be trend liquidity above. Of course, there could be, but this is the last recent zone that has a liquidity. And what do we know about liquidity and the last recent zones? That the last recent zones above/below the liquidity has a high chance to reverse price and hold the sweep and reverse after the sweep of the liquidity. Of course, there are liquidity pools anywhere else on the chart. There's liquidity pool right here too. There's liquidity pool right here. There's liquidity pool right here. There's liquidity pool everywhere on the chart, but we're aiming for the last recent liquidity, because the last recent liquidity and the last recent zone has a chance to reverse price after the sweep of that liquidity. So the second scenario, price will react on this supply zone, for example, and if this supply zone reaction happens, and then we can wait for a 1-minute change of character, because this is a 15-minute zone, so 1-minute change of character is perfectly fine. 1-minute change of character continuation down to this demand zone. Second scenario is this one. The third scenario, if price reacts on the supply zone, creates a flip zone, comes down to this 15-minute zone, creates a 1-minute change of character inside of this zone, continuation up to this 4-hour zone. This is the third scenario. So basically, these are the scenarios that are lining up for us. Pretty simple, pretty easy. If the demand tap happens first, then we can execute longs. If the demand tap happens first and it breaks, then we can execute shorts to the downside to the next recent demand level, right? If the supply tap happens first, if this supply tap happens first, then we can wait for a change of character, continuation down to this demand zone. If this supply tap happens first and it breaks, then we can wait for a flip zone, change of character, continuation up to the extreme supply zone. If the extreme supply zone tap happens, then we can wait for a 15-minute change of character, continuation to the downside to the next recent demand zone. If the 4-hour extreme breaks, then we can wait for a confirmation, continuation to the upside. So basically, all you have to do is build a narrative for every single zone that you see, and if you see a zone is being tapped that you build a narrative for, then you can wait for a confirmation of that zone. It's this easy, literally easy to wait for the tap of these zones. And if the tap of these zones doesn't happen, then you're not entering in a position, because you don't want to force yourself to the bad position, bad low probability setups. So basically, these are the highest probability scenarios for us that are lining up for this session. And these are pretty simple, right? Pretty simple. Just say it, yes or no. All reaction based, all natural, all simple. You don't have to predict shit that which zone will hold. You don't have to predict shit that which zone has a price to change character. You don't have to predict that where price will go, if it will go to the upside first or if it will go to the downside first. You don't have to predict these things. All you have to do is mark your zones and build a plan for those zones. And these plans are simple too. 2 plans for the zones. First is the change of character. Second is the break of the zone. These are the 2 plans that we are using. If one of these happens on one of these zones, then we are entering in the trade. If these aren't happening, then we are staying the fuck out of the trade. You don't have to force yourself into bad, low probability setups. These are the 15-minute possible scenarios that are lining up for us. Let me just remove the drawings. Okay, these are the 15-minute possibilities that are lining up for us. And if I switch to the 5-minute chart, I will be able to refine these candles. And on the 15-minute chart, we can actually see this wick as the start of the inefficiency. And above this, there's this supply zone that is called the first change of character, or not even change of character. But yeah, these are the 2 supply zones that we can refine the 15-minute to the 5-minute for this week, or even we can use this candle as a full supply zone. These candles have started inefficiency, and we don't know which zone will hold. These are 5-minute zones. We don't know which zone we can enter on. That's why we are using a confirmation. If this zone is being tapped and there will be a confirmation, this has a higher probability because that's the last recent zone above the liquidity. So if this zone being tapped, confirmation happens, then we can enter in a trade. If this zone can't hold price and it just breaks above, then we can wait for confirmation right here and enter in a trade. You don't have to predict shit that which zone will hold. You don't have to predict that this zone has a higher probability to hold. You don't have to predict anything. All you have to do is react on these zones and mark your zones. Build a narrative, build a perspective around these zones. That's all you have to do. Okay, so I didn't really refine this zone, but I will. On the 4-hour chart, we can refine this to this zone. Perfect. And I will refine this 15-minute zone to a 5-minute zone. Actually, I won't refine because it's clean on the 15-minute chart. And That's all. I won't refine these deeper areas because these are too far away from the current price action, and I don't really care about these zones right now. I'm only focusing on this zone. I'm only focusing on, sorry. So I'm only focusing on this zone. I'm only focusing on this zone and this zone and this zone. I don't care about what's happening below, above the current price action. I don't care about this zone. I don't care about these deeper zones. I don't give a shit about these zones. I'm focusing on the current price action. I'm focusing on these zones that I can enter a position in. If this zone is being tapped, then I will enter in a position. Sorry, one more narrative. If neither of these scenarios play out, so for example, this isn't being tapped, this isn't being tapped, but price creates another inefficient break of this structure right here to the downside, creates one more liquidity for the supply zone, then there will be a new scenario. You'll be able to enter on this zone that has created the last recent breakout structure, and you'll be able to enter in a trade from this zone down to this demand zone. These are the scenarios. New scenarios will be lined up during session. New scenarios, you will see new scenarios during the session. So you have to implement your narrative. You have to add new things to your narrative that you built before the session. But that's fine. If you build a narrative just like I did during the session, you will be fine because there will be a new scenario. Aha, there's a 15-minute supply zone. Aha, I will wait for a confirmation. Aha, I will enter in short trade. Aha, I will target this demand zone. Aha, this demand has been tapped. Wait for a confirmation or wait for a break. Aha, okay, simple. That's all. You don't have to predict shit. You don't have to overcomplicate things. You don't have to literally predict which zone will hold. You just have to implement. You just have to adapt. You just have to react quickly if the zone tap happens, if one of these scenarios happens. Was it understandable, guys? This is the yes. Okay. I won't go below the 5-minute chart right now because so yeah, I won't go below the 5-minute chart right now because as you can see, the 1-minute chart is a huge liquidity pool. Basically, the whole 1-minute chart is a liquidity pool. So there's a really high chance that price will sleep all of this liquidity, tap this zone, and I will wait for confirmation right here and enter a trade. So it has a really high chance. Or there's a high chance that price will break below this liquidity line because there's a liquidity line still. There's a high chance that price will create another supply zone and you'll be able to enter on this one. But finding any good position in this specific price action region, which is clearly a range, this is just a huge fucking range. We don't have to care about this range. All we have to care about is to wait for a sweep of this range, either on the first side, either on the second side. This is all we have to do. We don't have to predict shit on these messy candles. Just look at this 1-minute chart. It's a whole fucking noise. It's noise without the higher time frame. If you're not combining the higher time frame with the lower time frame, if you're not combining the lower time frame with the higher time frame, it will be a mess. It will be a noise. It will be all fucked up. And yeah, news will be released 30 minutes before the session opens. This will be orange for the news, but this could still give impact to price. And actually on investing.com, this is a high impact new. This is a red for the new. On Forex Factory, that's a medium impact new. So I won't be trading before these news are being released. I'll be waiting for the news to be released. And after the news have been released, I will send the market updates for you. And yeah, that's all, guys. I believe I explained everything that will happen. I believe I explained the flips properly and you'll be able to use this knowledge. And session starts in 10 minutes. So I will just head out and have a quick lunch. I will eat. It's easier to say. So yeah, thank you guys for being here and wish you a profitable session, wish you a profitable week. And once again, stay patient. Patience is key. Stay patient, stay calm, sit on your hands, wait for the best probability, wait for the best, clearest setup to play out. That's all, guys. Once again, thank you for being here. Once again, wishing you a beautiful day and beautiful session.
Thank you for being here, guys. Wish you a beautiful session.
How many coffee you had today? Actually, I'm pretty pretty fucking hangover because I did meet with one of the guy from the group. It was Borai Tamás. We had a few drinks and I'm pretty fucking hangover because I arrived home around 3 a.m. or 4 a.m. I don't fucking know when did I arrive home. But yeah, I'm struggling right now not to puke. And yeah. So once again, thank you guys. Wish you a beautiful day.
Have a nice day, guys.